Hey guys, welcome to the Falaya Focus Studio. Today we're talking about closing the deal with Jason Dupree of Cypress Title, my longtime friend. I just want to welcome in Jason. How are you doing today, man?
Doing good, man. Thanks for having me.
Yeah, thanks for coming on. Obviously, closing the deal is a big thing, right? Everybody wants to actually sell a house, right? Looking at them is pretty on Zillow, and searching for homes is fun, but actually closing the deal is the tricky part. Sometimes smooth as butter, sometimes tricky. So hopefully we, get some people some information to help them navigate that and make it as smooth as possible.
Sure.
So that's kind of what we're talking about today. But first, I guess let's just kind of talk about, how you got started in, the title world and kind of your background.
Yeah, kind of fell into it. I say by accident, but not really. My family's been involved in real estate forever. My mom's been a broker in town for years. And graduated LSU, ended up going to law school, getting out of law school and kind of having various legal jobs from, working in a few firms to kind of hanging my own shingle and just kind of trying different areas of law until I found something that I liked and essentially kind of worked my way back into the real estate since my whole family was kind of involved in that forever. So, one day my mom was, talking, I grew up around the dinner table with her talking about closings and going to the lawyer's title or going to the XYZ title or whatever. And then, so when I was finally practicing law, she's like, you ought to start doing closings so you can handle my closings. So that's kind of how it started, just kind of on a small scale, me just kind of learning the title industry, title insurance industry, and just with the intent to kind of handle her closings. And that was back to when, you had a few big title companies, but it was primarily like you would go to a law office to do a closing. So that wasn't out of the ordinary, for a realtor to send a closing to a law firm or a law office back then.
Yeah.
And so that's kind of how I got started. And then, and eventually kind of, grew it and expanded and started, doing closings for other realtors. And then that's kind of when I had to make the move to like a full-fledged title company.
So what year was it when you started into title work? Was it?
So yeah, I graduated.
I didn't even know that.
Yeah, graduated law school in '96 and probably didn't do any real estate closings for probably 3 or 4 years. Just kind of did other, worked at a couple of other firms, doing more traditional legal work. And then, I would say probably right around maybe 2000 started, you have to sit and pass a title insurance exam. And so I got that, those credentials so I could issue a title policy or represent, be a title agent for a title insurance company. And, so I started doing closings for her and I was probably just doing a handful for her and other family members over in real estate. And then, probably did that for 2 or 3 years, and then that's when I kind of realized, look, this is where I kind of need to go and to grow this. And
it is interesting how you see families like gravitate towards real estate. I see that a lot. Like I would say, Julie and me, we have rentals and we flip some houses, and then you see other people's families kind of gravitate towards it as kind of a family business. And y'all definitely have that. With your.
No doubt.
Your family is like heavily into real estate.
That's right. The family, were a lot of agents, brother, sister, mother. Right. My dad was a developer. So it was just kind of natural. I just knew the business just from growing up around them.
Yeah, I mean, you can't be around me for very long and not hear me talking about it. Like I was talking to somebody the other day about Julie. I was like, she hasn't done as much active like sales, but she's been listening to me like talk for years about deals and this deal and that deal. And even Jacob, after the last year of working here, he's gotten a crash course in it, right? From all the deals that we closed. So it's just like almost by like being next to it, you end up learning it and kind of getting ingrained in it.
Absolutely. Yeah. So it was just kind of a natural fit, natural flow. And that's kind of where, I didn't really think that's what I was going to do when I got out of law school, but then that's what I ended up doing. And then I ended up really enjoying it and liking it, for the most part. most people are happy to be at a closing.
I would
it's all
agree.
Good,
It's usually good.
So
like it's
just,
usually a happy time. Like my favorite job that I had that isn't real estate, right, or wasn't really a full was I delivered flowers for Billy Harriman.
Oh yeah,
yeah, and everybody's happy, right? They're all excited to see you. Like they're like thanking you. Right? It's like, what did I do? I'm just driving here and delivering them to you.
So that's what. Yeah, I kind of got tired quickly of the grind of like litigation type work and stuff like that, where generally no one's happy. And if you're doing a good job, nobody's happy with you either, because they're compromising and giving in and they don't want to or whatever. And so it was really nice to like, and refreshing to like start focusing on doing work where, for the most part, like I said, people are happy to be there. They're happy to come to the closing. There's somebody that's happy to be buying a house, somebody happy to be selling a house. They're getting money. They're, so it's just it was a much different environment and one that I enjoyed a lot more. So.
It is. It's fun being in the room when you're closing a deal, and usually people are excited.
That's right.
They're talking across the table, and you get the good cookies.
That's right.
The cookies are my favorite part.
The swag and the cookies.
The swag and the cookies are my favorite part of the deal. But anyway, man. So when was Cypress Title birth? So you started doing it by yourself?
Yes, I was just like solo. I was still working at a firm. And I started doing closings, as part of my work in that firm, just kind of on my own. And then quickly realized that like if I wanted to grow that, I needed to kind of be more just doing real estate closings and to probably start an official title company. And so, and that's kind of where the trend was going back then too. Like the title companies were dominating, the law firms were starting to do fewer, residential closings and stuff like that. And so, so I spun off on my own, still just under my name as a law firm, and then did that for probably another couple years, and then finally started Cypress Title probably in late 2004, early 2005.
Oh my. So that's interesting. I guess that brings my other question. Like that time, right? There's a lot of closings, the market's smoking hot, and then 2007, 2008 hits right as you're starting that business. Is that kind of how was that time early in Cypress Title's, development as a business, and then growing in your infancy of Cypress Title?
Yeah, it was challenging. I mean, we were blowing and going right from the start. Like it was like kind of like a refinance boom and all that when we were going, and then that snuck up on us, that housing crash. Like it was one of those deals where you didn't really realize what was going on until you're right in the middle of it, kind of deal. And, I didn't see it coming anyway.
Right.
And so, but it was all right. We weathered it and came out of it on the other side. We kind of got lean. You had to make some layoffs and, reduce some expenses and stuff like that. But we survived it and kind of came out on the better side of it, because it kind of weeded out a lot of competition too,
Right.
There was a lot of kind of fly-by-night people getting into the title business, or like, everybody was like, oh, this looks like a good business to get into. Let's do it.
I mean, that's what's happening right now with real estate agents, right? So real estate agents have literally in Baton Rouge doubled from 2,000 to 4,000 agents over this boom, and we're about to see that correction happen. And it's, it is what it is. And
when we kind of came out of that and actually ended up becoming bigger and better, basically, and I think you're right. I think the same thing is probably going to start happening in the next year or two with the stuff starting to slow down a little bit.
It is slowing down a little bit, I mean, I guess that, obviously we're on that topic. I mean, what do you think the market is, kind of right now? How are you seeing it? Or
it's definitely slowed down from the last 2 years, but obviously comparing anything to the last 2 years is probably not a good comparison, because it was so busy, like the busiest that I can ever remember it. And so I'm looking back like probably 3 to 4 years ago, and I think our numbers now are probably more in line with that, which was still a pretty good market, And I feel like it is still good. I know the rates are going up a little bit. I don't know how that's going to play out over the next year or so, but I feel like people are still buying stuff. It's just at a more customary rate, and and I don't think we have this big housing bubble in Baton Rouge. I feel like we're insulated in Baton Rouge. We're not like a Florida or a California where we have these huge dramatic price increases and then huge dramatic dips. So I feel like we're more level. So I think we're going to be all right. I just, obviously it's just going to, with higher rates, I think people just have to readjust how they do deals. And I think it's still going to be fine. People are always going to buy and sell property.
That's a fact.
I don't see that going away ever.
I don't see that going away ever.
I mean, clearly there may be times when it's busier than others, but I think we're getting back to more of our usual customary levels of business.
Right. I kind of agree. That's what I'm seeing. Like houses are still selling when I list them. Maybe it's just not 10 offers the first day, but they are selling extremely fast and still within a couple weeks we're getting contracts. So it's not like it's not, I mean, I'm still sending you closings and other cities too, Lafayette, Lake Charles, they're closing. And so, we definitely are seeing trends, and we got 6 listings last week.
Oh yeah.
So I mean, it's not nothing.
No, and our orders are like still pretty steady and pretty good. I mean, clear, like I'm saying, like most, we're not doing a bunch of refis like we were a year ago or 2 years ago, but we're still doing a lot of purchase business. The orders are still coming in pretty steadily. And people, we're doing a lot of cash buyers too. And there's people out there that have money.
There's a lot of cash running around.
And
right?
This is the kind of their time to.
I think it's
to
the
get in the
last
market.
little run of cash buyers, right?
So I don't know. I'm encouraged. Clearly, I don't think it's gonna be. I think it's gonna level off and. But I don't think the bottom is going to fall out. I mean, that's just my opinion, but I don't know. They pay people a lot more than me to figure all that stuff out.
Yeah. Whenever we did a CE class at your place, and we were talking about purchase agreement problems, or y'all did something like that.
Yeah.
And we were, talking about it, and the topic came up of interest rates, and, all these people are locked in at 2.5, 3, 3.5.
Right.
Like the switching cost between 3% to 6% plus having to move, like what is that going to look like from, like to your point, it's not a housing crisis. It's more of I may move because I got a new job.
Right.
I may move because we need a bigger house. We had a new kid. I may move. I may not just move on a whim. Like I did last year.
Yeah, it's going to be more the traditional types of moves. I got married, so I'm buying a house. I got divorced, so I'm selling a house.
Right.
I'm buying a new
somebody
house.
Passed away.
Right, exactly. So it's going to be more of those types of things, or job change, transfer, or whatever.
I would agree.
So, so I think that's definitely kind of, that's still going to be happening, and that happens regardless.
And I think it's happened pretty frequently on those sales.
Yeah.
Like, I don't think that's stopping people from selling because they don't have any equity left in their house and they have to hold it.
That's right.
You know what I mean? It's definitely still moving extremely
And the rates affect that, obviously, because it costs more. But still, I think what you're going to see is definitely like a leveling off of pricing, or maybe just a slight adjustment. I don't think it's going to nosedive down or anything, but I just don't think, I don't think we're going to see for a while where, you buy a house for $200,000 and sell it a year later for $250,000 or $300,000.
No, I know.
So
I was.
So I think that's just going to level off.
I was on a listing appointment yesterday with somebody that we're going to list next week, and they are buying a house in Palm Springs, and literally they're building in a new spec place, and in Palm Springs, which again is not a Baton Rouge market, it's a hot market.
Yeah.
California or whatever. And they were like buying the house at like 700, and then people were buying and flipping them. Like they would say they were buying them for themselves, but by the time it was built, it was worth like $800,000. It was crazy in California.
Yeah.
Like the appreciation was happening that fast out there.
And you see that like at the beach, like the whole Rosemary Alice Beach area. Same thing. People were buying and building houses and reselling them before they're even finished.
John and I have been talking about that.
I think you're going to stop.
He was looking at some of those over there. I was like, that was a huge, but it's like one of those markets are like, you either make a lot or you lose a lot.
That's right.
You live by this sword, you die by this sword.
So I think that stuff's going to slow down for at least
the
near future, with these rates.
Yeah.
So, but we'll see how it shakes out. I think,
no doubt.
I think it's going to be all right.
Dude, if we were both being able to predict the future, we probably wouldn't be
sitting
right here.
Exactly.
We'd be on a jet somewhere,
That's right.
But anyway, let's get back. What is, I guess, let's talk about what exactly does a title company do? Because I don't think many people completely understand, like, what does a title company do?
Yeah, well, for the most part, most of the time people are borrowing money to buy a house. So our primary role in that scenario is to ensure that the lender who's lending that buyer the money, that their mortgage is going to be in first position. So like if they lend you money to buy a house, they're going to go to a title company to get a title insurance policy to make sure that when they give you that money and put that mortgage in place, and if you don't pay them back, that they will have no problems foreclosing and getting the property back. So that's the primary role most of the time.
For sure.
If you're paying cash, you're gonna want to go to a title company to pretty much the same thing. Like make sure that I'm buying this house and that I'm getting it free and clear with no prior title issues or encumbrances, and so that my cash money is protected essentially.
Right. I mean, at the end of the day, you're just trying to make sure they get clear title, or
Yes.
That there's no issues with the transfer of title. And I think kind of the biggest thing that title companies do is handling the funds.
That's right.
Right. And I think people highly underestimate the power of that, because there is a lot of money on the line, and you've got to have someone experienced in handling those funds in order to make sure it's a smooth transaction and very efficient. And you see that in not trying to toot your horn, but y'all do that extremely well compared to some other companies that I close with, is the handling of the back funds and the efficiency on which you do that.
Yeah, well,
right?
I appreciate that. So yeah, you're right. Like that is another issue. Like obviously we make sure the title's free and clear, and that the lender's protected or the buyer's protected, that the seller is the proper seller to sell you the property and all that stuff. But yeah, in addition to, we take in all the money, we hold it in our escrow account, we prepare closing disclosure or settlement statement, which will kind of list all the third-party pays, who's getting paid out of the transaction and out of the funds, and then we disperse all those funds properly to make sure everybody's getting what they're supposed to be getting, and any current mortgages on the property are getting paid off and canceled and all that stuff. So yeah, and that is sometimes can be tricky, especially with all the widespread kind of wire fraud and stuff you're having today.
Yeah, I mean, I would say one big thing that people need to look out for when they're closing a house is making sure that they are dealing strictly with the title company, and that there's no scammers trying to hack your email and send bank routing information and routing cash to Cypress, to somewhere else, or Cypress routing it somewhere else. So it's very tricky on that. You got to be very careful. I always suggest personally to my people, and you might speak, is to get a paper check. And whether that's bringing it to Cypress, a cashier's check, and then when you're the seller getting a paper check, I just feel more comfortable that way. And I know a lot of people. I mean,
I'm with you. I'm kind of old school.
I'm old school, dude. I'm sorry.
Yeah.
I'd rather just have the check, because at that point,
I've seen some pretty, I say, sophisticated fraud schemes. It's not really sophisticated, but they're just really good at tricking people into sending money to where it's not supposed to go. So that's why, I agree with that. Like, just get a check if you can. I know it may be a little more inconvenient.
And even if you have to overnight it to them, right? If you're not at the closing, just have the check overnighted to you if you're not in the city to pick it up. Yeah. I mean, it's just safer that way. Yeah. And the only person that can cash that check is the names on the checks.
That's right.
Now, I know there are situations where there's multiple sellers and it can get tricky with trust and all kind of stuff. But those are edge cases.
That's right.
If it's, you know what I mean?
So yeah, but it's like you see all the time, like, and the scammers are pretty good. Like it'll spoof your email or hack into email, and then they know when the transaction's happening, or they know keywords, and then they will send an email, like it'll appear to be an email from us or appear to be an email from the customer's agent saying, hey, Cypress changed their wiring instructions. Please send your money to here are their new instructions. Send the money there. So we try to educate realtors and our customers, like never rely on any wire information that's in an email. Like we verbally confirm all that.
Never rely on email information. Always call. And make sure you're calling the number that is the right number too, by looking it up yourself, not email number that was called to you. Like, there's so many different levels to this. You've got to make sure you do it.
So, and that's when we've tried to implement policies where we verbally confirm all wiring instructions. We also, use a third-party vendor to verify wiring instructions.
Oh, really?
Yeah. So
there's third party. That's
yeah,
great.
it's a
Who created that?
it's a company owned by First American. I want to say maybe I may be getting the name wrong.
That's all right.
Safe Trust or Vera Trust or something like that. But essentially, the way it works is before we send out any wires, we enter the wiring information into their site, and they verify whether the account number and name and the account and all that stuff matches up. And it's an instantaneous verification or they'll either verify it or they won't. And if they don't verify it, then you gotta maybe go further. It's not perfect. There's some they have issues with credit unions, or if there's like a third party bank involved, something like that.
Sure.
But for the most part, I would say 85% is pretty easy. Verify the account, and then once it's verified and we send that wire, then it's insured up to $2.5 million. So
Oh, really?
so like if it is a scam and they verified it,
So you've
we're
got
protected.
insurance on the
Exactly.
back end.
Exactly. So
Okay.
so that's been a
I didn't
new
know
policy
about that.
we just started using this year.
Okay, I didn't know about that.
Yeah, so it's pretty good. So like that makes me feel better. So we're taking measures, but that doesn't mean that people still can't get tricked or human engineering where they there's some stuff we just can't control, or an employee makes a bad decision and doesn't do what they're supposed to do because they're trying to hurry and get out of there for the weekend.
That's the
and that's what they try to catch you at.
That's exactly what they try to do, because closings happen a lot on Fridays.
Right.
People are in a hurry because you want to move on the weekend, so you close on Friday, and they take advantage of that because people are in a hurry. And also, you've always got the pressure of the contract says you got to close on this date, and the realtors are all pressuring the title company. There's always this sense of pressure at the end of a deal.
That's right.
And it's like the last day or day and a half, and I'm like, I wish that's the one thing about the real estate process that I wish I could really perfect, and that I'm hoping to at some level smooth out with Falaya is how can we make this last 2 days really smooth for the homeowner, right?
Yeah.
And everybody's putting processes in place to put checks and stuff like that, but it's not alone. It's not a Cypress problem or Falaya problem. I think it's a real estate. The way the processes are, everybody's hurrying up to finish at the end.
No doubt, everybody's hurrying, and that's usually when you see these cases of wire fraud. Is when somebody's whether it's an employee at the title company is in a hurry to get out for the weekend. They're not really paying attention or going through their processes, or lender, or a buyer or seller, and they're trying to hurry up and get their money to you or send it to you, and they're just not paying attention. And so sometimes it is best to, like anything with a wire, I just tell everybody, call, pick up the phone, call, double check, triple check. Yeah. You can't be too careful.
My advice, paper check.
Yeah, that's right. That eliminates all that.
It eliminates it all.
Exactly.
I mean, it's very simple, and it's not that much slower. Really isn't, because your funds are pretty much guaranteed at that point. I mean,
most banks, I found that
most banks with dude, when I deposit your check, it hits quick.
That's right. And that's what a lot of banks, I know for a fact that a lot of banks in town.
But of course they know you.
But and they're national banks though too, that if they are used to your, dealing with you, they will give you immediate credit even on larger checks, because it's from the title company.
It's from the title company, and it's I mean, you're putting your law license and
That's
your
right.
whole career on the line.
Yeah.
You're not doing that for the heck of it.
Right. Exactly.
All right. So I guess that leads us to, we dealt with money, like what if something crazy happens, right? So what exactly is title insurance, and why is that so important? And why is that a vital part of the process?
Yeah, well, title insurance, for the lenders, so there's two types of title insurance. Let me back up.
Okay.
There's owner's title insurance, which protects the owner, whoever's buying the property. And then there's the second type is lender's title insurance. So if you're borrowing money to buy a house, the lender is going to make you buy them a title policy, and that's insuring their mortgage. That basically ensures that their mortgage is in first place, like if first position, that they have the first lien on the property. So if you don't pay and they need to take the property back, they can properly foreclose and get the property back. If for some reason there was a prior encumbrance that we missed, or some sort of title defect that prevents them from foreclosing on their mortgage, then they have that title insurance in place that insures them up to the amount of the mortgage, and so they will get paid. The owner has the option to buy title insurance, and that's essentially insurance for your equity in the property. So if you purchase property, if you pay cash for property, or even if you don't pay cash, but you're putting down a good chunk of change, the lender's insured, but you're not unless you buy that owner's policy, for your equity position. And that would cover a situation where, you buy a property, you pay cash for it, and then you found out that, the seller had a judgment that was rendered against them and recorded, and the title company missed it, and then that judgment creditor is foreclosing on the property and taking it back, or the seller didn't have you didn't have 100% of the owners selling you the property. There may have been a illegitimate heir out there that didn't sign off on the sale, so you may not have 100% ownership. And so those kind of situations, you're covered for your investment, the cash that you put into the property. It also covers you, like if there's a title issue that can be fixed or litigated, then that policy is going to, cover the cost of doing that with hiring a lawyer to do that for you and all that stuff.
Which can get extremely expensive.
That's right.
It's not important.
That's right.
Until it's important.
That's right.
Yeah. You know what I mean? It's like one of those things. It's
and
like, why do I have to pay for this?
I mean, you and I had
we've had one.
I recently, like,
here's one thing I've noticed, like, since opening Falaya, right? Like, when I was a broker, I was doing, 15 deals a year, 20 deals a year. Now I'm looking at 200 deals.
Right.
When you start doing volume, like legitimate volume, which you do, by the way, different things happen, right?
That's
I mean, one out of a million things happen, and you've got to start to put processes in place to check those people.
That's right.
And check things.
And sometimes it's just stuff that doesn't matter what you have in place. You can't, like, the issue that we had, closing we did, I mean, the most diligent title exam in the world was not going to catch this issue.
Oh, I know.
But I am glad those folks bought title insurance. They were able to, recoup their investment, and, and the title insurance company made it right. So, I mean, that was, I hear all the time.
Did they pay cash for that?
They did.
They did?
They paid cash.
And they
it was
bought
$250,000, I think, or something like that.
Yeah,
I can't remember the exact number.
It
was a substantial investment. They were going to build their retirement home.
I didn't realize they paid cash. I thought they had.
And there was essentially a title defect that I really couldn't have discovered in my examination that dated back to like 1928 or something, and that it was kind of a quirky deal too. That really,
I still don't believe it. I think that's ridiculous.
And it may not be essentially a title defect, but the title insurance companies stepped up to the plate and paid them back for that, but it was a weird setback line that basically prevented them from building on. I know
it's
on
like
the property.
It's just a weird. It just goes to show you that there's a lot of weird things that happen that are hard to find, like this long deed restriction from the 1930s with a setback. I mean, it's like so complicated that,
and especially in a neighborhood like that, it was an older neighborhood where there's generally not a lot of restrictions, and so, I mean, I've closed hundreds of lots in that neighborhood
and it's a big lot. It wasn't like it was like a weird. It was 103 by 103.
Yeah.
So you've got a huge lot.
Yeah.
You would assume it's buildable. It was already subdivided on the tax roll. So
and that was a violation of one of the restrictions. So that was another thing. You could probably bring a lawsuit and have that restriction
discredited, but you got to pay
declare
for it.
But then you got to.
But you got to pay for that.
And you got to have a lawsuit. And so that's a title issue right there. So
it's an expense, and
that's
lawyers aren't cheap.
That's right.
So, especially in litigation.
Exactly. So,
you're right. When you start litigating, it gets expensive in a hurry.
So there's situations like I hear that all the time. Like, well, do I really need to buy title insurance? And it's just like any insurance. You hate paying for it until you need it. And so
it's like I don't want to pay for health insurance. I pay almost $15,000 after tax dollars to the insurance company every year.
I know.
I don't ever use it really because I'm like in good health. But that one time,
that's right. So it's just one of those things where and I'm glad those people actually bought it, or that would have been.
It's changed my perspective on things, right? Because I've flipped houses. I've that, and I've told you I wasn't buying it.
Right.
Like I literally told Dupree, I was like, I'm not buying title insurance. Take it off.
And it's a risk. You just got to make a risk analysis on what the risk is, and for the most part, generally, the risk is low. But
especially some of the ones that I bought, they had owned it for 50 years,
Yeah.
and it was just not maintained. So but
each case is different, and just you got to make the risk analysis. But if you're paying cash like that, like I mean, if you got that much cash at risk, then I think it's a no-brainer to buy title insurance.
Right.
Because just like in that situation, those people are putting $250,000 cash.
It's a lot of money.
Right. They could have said, we want to save a couple $1,000 and I buy title insurance, and then that would have cost them $250,000.
Right.
Plus whatever the lawyer fees and all this stuff.
Yeah, it would have been
so
right.
So that's probably the best purchase they ever made.
I would agree. Right. It's not important until it's important.
That's right.
I think that kind of comes back to it.
Exactly.
So I guess. How do you, we've kind of talked about this before. How do you think someone should like pick a title company? Like if they're really looking to, choose between title company A, title company B, like what separates title companies, and how would you kind of, pick a title company?
Yeah. So it's all like, I mean, I know some people shop cost and stuff like that, but we all pretty much are in line within a few bucks of the fees. I mean, I think in, certain areas, most of the title companies charge similar fees. They may vary a few dollars, but I would suggest picking that based upon just the reputation of the title company, how long they've been around, what kind of experience they have.
Right.
Because like I said, especially when business is good, there seems to be a lot of title companies popping up. And if they don't have a lot of experience, it's one of those industries where it is easy to make a mistake, and you usually don't know about it until it's too late, kind of deal. So, like, you want to, make sure you go with somebody who's been around for a while, who's got a solid reputation, a lot of experience. I think that would be my primary.
I think I completely agree with you. It's the same thing when you pick agents, right?
Yeah.
You want to pick an agent that's experienced, that's closed a lot of deals, that knows how to handle things and get things done, because you can go one way or another, but at the end of the day, you want to sell your house, or you want to buy a house, right? And you need someone that's actually going to be able to do that for you. And like you and I, we've experienced that deal, and now we're more educated about it, and we probably won't make a mistake again, or we'll put other things in place. And after you do that for so long, you start to grow processes that are more efficient. Transparent and easier to get to the closing table.
Yeah, no doubt. And like I said, the fees, like I know a lot of people shop fees, but you're not going to save more than maybe a couple $100 going from one title company to others. They're all within
John,
very similar fees structures.
He was like, Dupree's more expensive. I was like, yeah, but I was like, but he's 2 minutes from your house. He's a great dude, and he's going to close it, and he's probably going to service you way better than anyone else.
Well, and I just I don't know. It's not like I'm trying to be more expensive, but
No, you're not.
We try to have fees and processes in place and good staff and all that stuff, and you got to pay for that. And
I would agree. That's what I'm saying.
And it costs me a lot of money to make sure all that's running right. And so that's why. And I tell people all the time, like, if you want to use the cheapest person in town for maybe one of the largest investments you're going to use, then be my guest. I'm not trying to run business off, trust me, but there's a reason why we have our fee structure the way it is.
No doubt. And that's what I'm saying. It's not that much money.
No
difference like that. It's definitely not.
No. Like, if it was $1,000 difference or $2,000, I'd get
somebody that's in the business like me or John, or that does so many, knows that it might be $200 more or $100 more.
Right.
But most people, they're not. Right. And at the end of the day, I think that, just like you said, the mortgage insurance is worth it because it's marginal on your investments. Same thing. You're going to pay $200 less for,
Exactly.
It's retarded, right? And I guess that gets me to the next question, like, who picks a title company in your experience? And I'll kind of chime in.
I think so. It depends on the transaction. So if it's a refinance, generally whatever lender the borrower is working with kind of steers that. In a purchase, I would say the realtors generally. Now certainly there's situations where I have friends or people that just know me that want to use us, and they'll tell their realtor. But I would say the most part, the realtors are probably directing the business to the title companies. Yeah. And they're doing that based upon relationships they have, experiences they have with them. They know if they send it to Cypress, it's going to get done properly, or they're going to communicate well with us and so forth.
I would agree.
Yeah.
So it definitely is either the mortgage broker or the realtor directing them. Typically, if you're the seller, and you're paying closing costs, I would highly advise you on directing it to, your partners and who you want to make happen when you're paying for those costs,
Right.
But, it's kind of interesting. When I first started in real estate, I didn't realize how much deals y'all did with lenders, what I mean? And the refinancing. And I guess when I saw that refinance boom, it just, kind of.
Yeah, the lenders definitely steer a lot of business, especially in refis. Even in some, I say the realtors kind of trump the lenders in a purchase deal because what you have working there too is the lenders are trying to get referrals from the realtor. So like they're, if you send a lender a deal and say, I want to close at Cypress, even though they may want to use a different title company, they're not going to buck you on that because they're going to try to want to get more business from you. You see?
No, I would agree. So, and they're not going to usually those two are, you work with lenders that think the same as you, right? Like, for the most part.
Yeah.
They're going to want similar things, but they're definitely not going to buck you, but they also don't necessarily know. They know where the purchase agreement's going, and the realtors send it to them, and is usually dictating that, right?
That's right. That's
from
right.
the get. You know what I mean? The flow of things.
And hopefully I feel like we are at a place, and if not, hopefully we'll be one day where the lenders are like, oh yeah, like even if I'm not their primary title company, they have no problem using me.
I would agree that that's already the case, right? Like, so I've worked with lenders that you're probably not their primary, and they're like, heck yeah, send it that. You know what I mean?
And that's kind of a good spot to be in.
Yeah, it's a great spot to be in. I mean, I would say there's about 4 or 5 in town that everybody's like,
yeah, no doubt.
If that goes there, it's fine.
It's going to be fine.
I could name
I agree with that. Yeah.
I could name them on my hand. I'm not going to name drop here, but there's definitely about 4 or 5 that everybody's just like it's gonna be.
And I agree with that. And that's that's probably how it is in every town and every city and state.
And I'm even close to some smaller ones that have done good work too that have surprised me.
Yeah,
it's interesting.
Yeah.
When you have a young, hungry lawyer, that's just starting,
no doubt.
You know what I mean?
Doubt. And there's always going to be new people getting into the business, people getting out. So no doubt, it's constantly changing landscape. But I think in Baton Rouge, at least, there's a handful of companies that have been around for a while that are probably have a good reputation that pretty solid, and everybody's okay using them, I think.
Yeah. So I've obviously flipped houses and done rentals, and sometimes when you're doing that, you're trying to move fast, and you're trying to, or you're in a cash deal, or you're in a hot neighborhood and you're trying to make the closing happen quickly and compete in these hot neighborhoods and hot houses that might come on the market at right price points. How quickly can a title company close, and how quickly does the title process take if someone was going to write a cash deal and wanted to still use the title process efficiently and title insurance and title search and making sure it's efficient?
Yeah, it just depends. It could happen really quickly. A lot of it just depends on the title itself. If it is a property that's pretty clean and and there's not a lot of issues, we have in-house abstracting staff, so we can turn those around really quick. Like, I mean, I could get an order today and have the abstract, same day or the very next morning to review. And if it's clean and it's a cash deal, then we could, potentially be closing in 2 or 3 days.
Got you.
Now, if I get the abstract back and it's,
got
150 pages and a lot of problems we got to get resolved or fixed or just judgments distinguished and all that stuff, that could take, several days. So it just depends typically on the property. We are set up to turn things around pretty quick with the in-house abstracting staff, and I can.
So do most title companies not have that, or what do most?
I think some of the bigger ones probably do, but I would say for the most part, most title companies in our area probably use third-party abstractors. So they may be getting your purchase agreement, send it to that third-party abstracting company, and then you're kind of at their mercy on when you get it back. Obviously, if you're a good customer, they're gonna try to turn it around for you. But we have the luxury of being able where I can pick up the phone and call my abstractor and say, hey, this is a rush. I need you to stop everything you're doing and do this one now for me, kind of deal. If it's something that has to be done like that, or we have this team of abstractors that can just turn them around quickly, constantly, and they're only doing our work and not other companies' works either.
Right.
So
you have enough business to give them. Yeah. Right, to keep them.
So that helps. That has definitely helped our turnaround time a lot.
Right.
It definitely, probably shaved a day or two off of our typical turnaround time when we started doing that.
Yeah, I mean, I usually say the week is about as soon as you can get it, but
Yeah, I mean, I've closed deals like
I guess it could go
2 or
quicker.
3 days.
I guess you could.
Yeah, but I say a week. 5 business days is a pretty quick turnaround.
Right, a really quick turnaround, right?
To get all the pieces together. You
Yeah,
know?
yeah.
But you can do. I mean, we've done them shorter. You know, it just depends on the property really and the
The issues
involved.
that come up, which
That's right.
kind of leads me in. What's the most common issue that you see whenever you do title searches? Like, what comes up that creates the most problems?
Yeah,
Or
there's just I don't know if there's a common issue, something we get a lot, and it's not really a big issue, but it just sometimes may take some time to get through it. Is like judgments with people that have like very common names. So you know, if you have a John Smith, for
Okay.
instance, who's a buyer or seller, you're going to get that abstract back, and there's going to be 20 judgments against a John Smith. You know, and so you got to go through those and to figure out if it's your John Smith or not. You know, back in the day, sometimes they put identifying information in judgment, sometimes they don't. You know, we went from a time period where they would always put a social and everything, full blown social, to then privacy issues came into play, and then so they started taking that out, and so sometimes it's challenging to like find out. You know, you got to contact the judgment creditor and tell them what you're doing, and you're trying to distinguish this judgment, and you got to give them an affidavit saying this is my John Smith. Here's his date of birth, social security number. Is this the same John Smith that you have the judgment against? And they got to sign the affidavit saying it's not the same person. So you have that a lot, and that's depending on the name issue. You know.
okay, I never even knew that. I learned something new today, man.
Yeah, or you'll just have like. Another common deal is just uncanceled mortgages. So, like,
Okay.
you know, you may.
That's the one that I've dealt with. That's been a pain because that's happened.
Yeah,
and then some of those mortgage companies
are gone.
They're gone,
Yeah.
or they're in the Midwest,
right.
and they're like a secondary buy,
Right.
and you can't get a hold of them. Like,
That's right.
Literally 2 weeks a deal got held up because we couldn't get in touch.
That's
with
right.
people.
So, yeah, you got a seller who's, you know, they say, yeah, I got one mortgage payoff. Here it is. But you get the abstract back, and there's 2 mortgages. And they're like, oh, no, well, I paid that one off 5 years ago.
Right.
Well, the mortgage is still recorded. It's not canceled, and it's not prescribed, so it's still there. So we got to get it canceled. And, you know, yeah, like you said, the lender's no longer in business or something, or you can't get in touch with anybody to verify it's been paid off. And so
Right.
that's kind of challenging. So you got to sometimes work through those, and that'll take extra time. And you got to, figure out who is the holder of that note now, because they could have been assigned several times. And then
even some of the mortgage companies that are secondary market mortgage companies that are holding the loan,
right.
but they won't give you the payoff.
Yeah,
That's happened a lot to me too, and it's frustrating. You have the loan, you're servicing the loan, but you can't just give me a payoff real quick.
No,
It's like sometimes it's like
old school tool. You got to fax a request.
No
and then
fax.
and
No.
then they may take 72
dude, I
hours. to get
sat
it back to
on
you.
hold. I sat on hold with the mortgage company from Baton Rouge all the way to New Orleans, going to like the Idea Village,
Right.
on hold, trying to get this mortgage payoff to close the deal.
Yeah,
it was
no doubt.
ridiculous.
Yep.
And they still didn't pick up.
That's right.
I was
Yeah, so we run into that stuff all the time too, where it's like, so like we could have closed the deal 2 days earlier
Right.
if we would have got this information, but it's hard getting. You just have so many moving parts. Sometimes it's
Right.
hard to like get it all together. Sometimes because a lot of it's moving parts that aren't in your control.
Right.
you're-
I mean, you can only control what you
That's right.
control, and sometimes you're waiting on third-party vendors.
That's right.
And that's the inefficiency of it. But it is
Right.
what it is. There's not much you can
That's
do
right.
about it when there's judgments and
Yeah. So that's common things we run into that will delay us, and I mean, most of the time it's not your person. If it is your person, then you got to get payoffs and all that, and that's usually if there is a judgment that's against your person, it's pretty easy to get a payoff because they want to get paid.
no doubt.
Yeah.
They want to get paid.
That's right. So anyway,
Well, obviously we're doing a lot of digital stuff and automating paperwork and trying to do some new and inventive stuff in the real estate space. And we've seen this thing. I don't know if you know what an NFT is. Do you know what an NFT is?
I've heard about it. I don't really know what it is, but it's like a digital artwork or something like that.
Yeah, so right now it's like really big with like Gary Vee and
Right.
some of those people with NFTs and creating a digital artwork and trading artwork in the
Right.
digital space. But in February of this year, they had, and I spoke about this at NOE, New Orleans Entrepreneur Week, talking about the transfer of title using NFT and blockchain technology, right? I'm kind of I know where you're probably going to land on this, but what they were basically doing was creating an NFT of the property, right? Or actually, they were creating an LLC, and then they were creating an NFT of the LLC, right? So Blondo LLC, and Blondo LLC now owns the property.
Right.
Do you understand what I'm saying? So now they're buying and selling the holding company, which is Blondo LLC, but the property is never transferring.
Gotcha, from the different entity. Yeah.
Right. So it's not really transferring at the courthouse. It's transferring on the NFT blockchain in between the two parties. Now, granted, this was a cash sale.
Right.
There was no mortgage. There was no,
Right.
I mean, it was very clean. It was
it
was actually an auction.
Yeah.
I mean, it wasn't a standard sale, right?
Yeah.
So, I wonder, what do you think about the transfer of title digitally, and what do you think remote? I guess COVID may have pushed that forward more.
Yeah. Well,
or where do y'all think about, wet signature and digital signature, and what do you think about the space of title moving forward over the next?
Yeah. Well, the scenario you were talking about, it seems like I can see that happening a lot easier, because that's basically you're just purchasing the LLC or the membership interest or whatever, and there's no formality or requirements for that in Louisiana. Like you can do that however you want to do that, essentially.
Right. That's how they're trying to get at it.
For transferring title to property here, you have to have authentic form or authentic evidence, which is a notary authentic act, which is the document needs to be signed in the presence of a notary and two witnesses. There are, and COVID kind of accelerated this. There are jurisdictions throughout the country that are doing, more digital closings like DocuSign, or they call it RON, remote online notarization closings.
Okay,
yeah,
I haven't heard that.
And we have that here. And in fact, during COVID, I think the governor issued an executive order authorizing the use of RON, remote online notarization, but it still exempted out acts that were required to be in authentic form.
Okay, so
it didn't really help us.
Real estate.
Yeah. But essentially the way RON works, as I appreciate it, is, you can, everybody can sign remotely, and it's still like notarized and considered a notarized document, even though you may be in Baton Rouge and the notary may be in Texas, but the notary is actually like almost like a Zoom call or something. You're logging in and they're watching you sign electronically, and they're notarizing that signature, saying that they saw you sign
and they're
electronically.
just like looking at your license.
Yeah, I guess
facial recognition.
Right, I guess they have a way to verify the identity still, and but they're just basically notarizing it remotely online. So everybody's online together signing,
Right.
But right now in Louisiana, we don't have that, and the reason is primarily because of the foreclosure laws here. So like for a lender to foreclose on property using executory process, there's two ways to foreclose. You could use ordinary process or executory process. Ordinary process is basically just like filing a lawsuit saying, I have a mortgage on this property. They didn't pay me. I want to foreclose on the property, get it back, and sell it to satisfy the debt. But to do that via ordinary process could take 2 to 3 years. I mean, you could drag it out forever. It's like just a regular lawsuit. Executory process is like an expedited way to do that, where there's no defense unless you paid the debt. There's nothing you can do to hold it up, unless you prove that you paid the debt. But in order to use executory process, the mortgage has to be in authentic form. There's got to be authentic evidence, which is the notary, two witnesses. So even if, and that's another thing.
The mortgage is never going to give the cash unless.
And that's another thing that we do as a title company. Like we have to ensure that the mortgage is actually executed properly. Like if you come to my office and we do the mortgage and issue a title policy, and we only have one witness, or it's not an authentic form or something like that, if the notary forgot to sign it, then they can't foreclose I mean, they can still foreclose, but they got to use ordinary process, so it takes a lot longer.
Yeah, they're holding their capital, and they're not turning their capital over.
That's right. So that's why, like right now, you still have to have. Ron is not considered, like if we did a remote online notarization closing in Louisiana, that would not be considered authentic form. So a lender in Louisiana would not be able to use executory process until the law changes on that.
Okay, I didn't realize that was like the pressing matter.
I mean, that to me, I mean, I'm not an expert in that, but I think that's really why we're not.
Well, that's why people wouldn't adopt it as quickly.
That's right.
Because if you can't, it's the same thing why the NFT right now. And I gave that speech at NOE because it was talking about the future. Right. It was all about the future of this, future of that. But we live here today.
Yeah.
Right.
And I think that's coming, though. It is.
There's definitely going to be a time and a place for something like that. But to your point, we were already talking about wire fraud. We're talking about other things. I mean, what does that open up on mass scale? We'll obviously see, but how is that going to be adopted? I don't know, but there's definitely going to be a time and a place for it because people want efficiency. And
it's getting there. Like we do closings all the time where most of the package is signed electronically.
Exactly.
Except they're coming in just signing a few documents that are required to be signed wet, and that it makes the closing go by quicker. You're not signing 100 documents. They've already signed all that electronically, and most of the documents can be signed electronically. I mean, we have electronic signature
cash sale.
Right. We have. What
do you have to
the
have?
Cash sale has to be wet right now, and the mortgage.
So 2 documents have to be.
Yeah, and right now, basically, like most affidavits that are in a lender's package, they're making us get them wet signed, but from a legal standpoint, they could pretty much DocuSign a lot of the stuff in the package, and some lenders are doing that. Like we'll get, packages from most of our lenders now where the borrower has already signed, half the package.
Yeah, I know Assurance is doing that.
Assurance, GMFS does that.
is doing it. So the big boys are
exactly.
doing it, right?
Exactly.
Which I think is the way to go. I mean, it makes it more efficient for you.
That's right. Yeah.
And for them. They don't want to sit there and,
exactly.
You know what I mean? They don't.
No, it helps everybody.
It helps everybody. The only thing is, one thing I would say is for realtors out there, for anybody being on closing, make sure you give your clients space to ask questions and be comfortable, at the closing table, because sometimes there are questions that come up, and that's where you can add a lot of value.
And I think no matter what, even if we move to more digital DocuSign closings, I think you're going to see more of that in refinance transactions. I think purchase transactions, even though the buyer may sign a lot of his loan documents electronically, I think there's people still want to come to a closing and see the seller and get the keys and ask those questions.
So our best review that we've ever gotten has been from Terry, who said it was a joy to be able to be more involved in the process and get to know the buyer and know the buyer. I think the power of that and the connection is stronger than people think.
Exactly.
Right? And I think buyers and sellers want to know who, they want to know they're giving their house to someone, that's going to take care of it.
And I think you as a realtor want to go to the closing
and you want to meet
your client. Yeah, exactly. You don't want to get in a world where you never meet your clients.
Well, they remember it. Yeah. They remember you and they remember it. But I've been able to foster relationships from afar.
Yeah.
I mean, we have one in Shreveport where they decided to rent out the property because it's a good investment and they have the capital to do it.
Right.
But they're going to give me 5-star review. They're already referring us out. I mean, so you can connect with people. It's just harder.
Yeah, no doubt.
Yeah. Let me tell you, it's way harder. I mean, I'm definitely better in the room.
Yeah.
Especially in the room with a beer.
That's right. Exactly.
But anyway, man. So I guess let's touch on a couple more things and we can wrap up. Right. If you go to a closing, what should people bring to the closing? Prepared.
Certified funds.
Certified funds.
If you need to bring money to the closing, and we will tell you how much you need to bring, and so make sure it's in certified check. Don't show up with your personal checkbook to write a $200,000 check to me.
Or cash money,
Because the problem with that is, or cash, is A, we can't take cash. B, if you have a personal check, I think by law, if it's over $2,500, it has to be certified funds. And the reason for that is we have to, our funds have to be collected in good funds. And in other words, like they're there, the check is cleared. Like if you write me a check, I could deposit it, it could bounce 5 days later or 3 days later, or you could stop payment on it or whatever. So collected funds, I actually could, I guess, take a check for $200,000, but I got to wait until it's clears and it's collected, which could take 7 to 10 days. Right. So, so that's why we're saying if you want to close on the closing day, bring certified funds.
Yeah. You got to bring certified funds. You got to bring your driver's license.
Yeah, driver's license, exactly.
And you got to sign, right?
That's right?
Get ready to sign, right? So
that's right.
He's got to make sure that you are who you say you are.
That's right. That's right.
Right, which is what we just talked about a second ago. And you need to make sure that you got your cash there.
That's right.
What always made me interesting too, like, because from a broker's perspective, I've never asked you this, but sometimes I get $10,000 deposits.
Yeah.
It doesn't happen a lot.
Yeah.
But I do. Like, what do you? I know you and I do enough business that you would trust me, I guess.
Yeah.
But am I supposed to legally bring you a certified funds check from my bank when I do?
No. For the deposit checks, it's fine.
It's fine.
Yeah,
okay.
like
I was always.
I think the broker's account, same kind of
It's
issues
the same
we have.
thing. Escrow. I have an
right.
escrow account.
I think the issue is just making sure it clears. Like, you don't want to do a quick turnaround closing and on a $10,000 deposit. Because by the time you see what I'm saying, like if you had a buyer come to you, hey, I want to close in 5 days, and he gives you a $10,000 deposit check.
No doubt.
By the time you put it in your bank, write me a check, we could do the closing, and that check could bounce, and then he's gone or something.
And I'm stuck.
Yeah, exactly. We're all stuck.
We're all stuck.
Right.
So
I think that's the issue. Like, we can take regular checks, so they just have to clear and be collected.
Yeah, and that's
it just takes time. So.
Yeah, because I was thinking about it when I think I had a $10,000 check. I was like, maybe I should drop this off a couple days earlier to Dupree. I was like, I don't know.
But if you're writing it, if you put it in your escrow account and you've let 7 to 10 days go by and it's cleared, and then you can write a check from your escrow account.
Very rarely do I have somebody doing that anyway. Quite honestly, right now, but. It's an edge case. I figured I'd ask you.
Yeah, no, I got you.
Anyway, man, I guess one more thing.
Okay.
Power of attorney.
Yeah.
What exactly is a power of attorney, and why would it be important?
Yeah, it's we do that a lot, where it's essentially when one party can't attend the closing, so you're appointing someone to sign on your behalf, and so you. Whether you're selling or buying, if you're selling, it's a little bit easier because you can. It's the same document. You're basically preparing the same document of power of attorney, where you appear before a notary and you state that it's your intention to have whoever you want to appoint to represent you, so they can sign as if they're you.
Right.
If you're buying and a lender's involved, they need to be a little more specific. Like, you got to make sure they have authority to sign notes and mortgages and borrow money either at a certain rate or up to, or whatever their terms and conditions that agent that you're appointing deems appropriate in their discretion. That way it covers everything. So, but most lenders will, if you're borrowing money and the borrower can't be there and they want to appoint somebody to sign all the loan docs on their behalf, generally the lenders make the power of attorney be very specific to that transaction.
Got you.
So, and they want to approve all that beforehand. And that's another thing. Like, if you're a real estate agent and you're representing a buyer that you know is not going to be able to attend the closing, like, get it way ahead of that on the front end, because a lot of times the power of attorney, like the title company can prepare the power of attorney easily, quickly. The borrower can come sign it, but the lender has to approve it. So if you wait till the last minute, it could delay the closing. Correct, because they're not going to let us. Like, we can't just tell the lender the day of closing, oh yeah, the buyer's not here, and they have this power of attorney. This is their agent signing for them. So So they want to know that well ahead of time. Yeah.
I don't particularly like. I've signed for a lot of people.
Yeah.
I don't really like signing mortgages.
I don't.
I'm okay with the sale if they've signed the CD or they've authorized the CD on an email and I have chain and the CDs match up and I'm just signing the same CD that they already authorized. Then I'm okay with that, but it's still a little scary when I'm signing.
No, you'll be fine. There's you're not signing as you're
You're
signing
signing as them, right?
So it'll be all right.
doubt.
But it is just I do recommend against it if you can avoid it, just because
if you can, right?
It's kind of a hassle, and each lender is different in their rules for signing. Like if you don't sign it exactly like they want you to,
right?
And it takes a lot longer at the closing because. Some lenders just like if I'm your agent, I can just sign my name, but some lenders make you sign your name by my name, comma, agent and attorney in fact, and it literally takes twice as long to sign all the loan documents.
Yeah.
So I don't know if you can avoid having to use a power of attorney or appointing an agent to sign on your behalf. It's definitely cleaner and easier. But we can do it if there's sometimes there's just no getting around it. Like
I mean, especially
out of town or traveling,
relocating, or
right.
I would say relocating is the biggest factor
exactly.
for power of attorney. If someone's moving out of town, they're going to need someone to be there.
That's right.
They're closing in Tennessee, but they're closing in Baton Rouge today, and then they're closing in Tennessee on the same day.
Yeah, sometimes you just simply can't avoid it, and I would rather do that than do a mail away closing because then we always run into issues with that too.
I agree. I think it is like if you're going to rate mail away and power of attorney is above.
Because then we still have control over the situation. If I'm mailing away the documents to another state or city, and with instructions, no matter how detailed my instructions are, inevitably the documents come back and somebody didn't sign it right or didn't witness it right or something like that, and then you got to go back and fix all that on the back end. So I would rather do a closing via a power of attorney.
How many people do you have check the documents every time you close? Is it
we do. Yeah,
do y'all have like several layers of people out of curiosity?
We do. I mean, we have like the closers who
they look at it.
They put together the closing package and put together the closing disclosure and settlement statement, and they'll definitely check through it. The attorneys, when we handle the closing, are supposed to kind of go through it as well.
Right.
And when I'm, I kind of go through everything when we're signing it, obviously, to make sure it's all signed properly. And then we have a post-closing department on the back end that kind of goes through everything and gets it all the documents, pulls the documents for recording, ships the packages out to where they're supposed to go, but they kind of check it on the back end as well.
Yeah, I'm kind of interested because we're putting that in. How many people need to check this to make sure the file's closed?
The more the merrier.
The more the merrier. I agree because everybody
you just miss stuff sometimes.
Yeah, it's just inevitable, like a check mark here, or
exactly.
It's something simple.
Exactly.
It's never, But
the good thing about the volume we do is I'm used to. Now we know like what the little quirky things are that people miss a lot, and so we know that now. And and once you've done, several.
That's why the volume thing.
Yeah.
Like I completely agree with you, and I honestly think that's why I'm like getting my MBA in real estate right now. Like the way I look at Falaya is like Falaya could take off.
Right.
It could be amazing. It could change the whole real estate space. At the end of the day, I'm selling so many properties and learning so much that I'm going to provide so much value for my future clients that it's not even going to be funny. Right? Do you understand what I'm saying? Like having done 200 houses in less than a year, like and this isn't a team. Yeah. This isn't a team that did 200 houses. It's Barrett Blondo.
Right.
You know what I mean?
Right.
It's different,
Yeah,
and when you do that, you end up learning a lot and that's invaluable.
Well, we've done so many transactions that now I'm like, if a document's missing in a package, I'm like, hey, I noticed this affidavit wasn't in the package. I noticed in the last 800 I've done. So something's missing. We need to check on it,
Right.
So I don't know. You just kind of learn by experience, I guess. And
you do.
Yeah.
It's like that in every trade, right?
Exactly. Right.
The more you learn, the more you do, the better you get.
Yep. So for sure.
All right, Jason. Well, I appreciate you coming on, man. Hope that some people back home are going to know how to close the deal a little better now after talking to you. And I appreciate you coming on, my man.
Thank you for the beer.
No problem, man. There's more where that is back there. Cool. Well, guys, we'll see you next time on the Falaya Focus Studio. Hey, guys, I wanted to take a second and say thank you for watching the Falaya Focus Podcast. At Falaya, we are reimagining the way real estate is bought and sold. So we need all the love and support we can get to grow our movement. Please tell all your friends and family about all the great things that we have going on here at Falaya. Please like, share, and subscribe to all of our content, and we'll see you next time on the Falaya Focus Podcast.